Head straight to TradingView and open a gold chart. Search for XAU-USD and the symbol bar at the top. Are you curious about how this performs at a scale? We conducted a hypothetical backtest on the S&P 500 using a 1-hour time frame, and across 100 of trades, the structure framework showed us. And the indicator section, type rolling VWAP in the search bar, hit enter, and click on this one to add it to the chart. VWAP stands for Volume Weighted Average Price. Rolling VWAP, that's just VWAP calculated over moving window instead of the whole day. Could be the last 30 minutes, an hour, or even several days. Now, in the rolling VWAP settings, we need to adjust the band multipliers. Set all three of them to 1. Then increase the bars option to 200. At first glance that might seem minor, but this adjustment filters out a lot of noise. Look at your chart now. 3 lines appear. The main VWAP line and 2 bands above and below it. Don't just glance. Watch how price reacts with these bands. These lines are your trend identification and potential confirmation logic, but only if you understand how to read them correctly. Here's the core principle. If price is trading above the bands, the market is in a bullish phase. Everything is leaning upward. If the price is below the bands, the market is bearish. And when price bounces around inside the bands, the market is ranging. No clear trend, just sideways movement. Beginners often jump in here thinking they see an opportunity, but the market isn't ready. That's where losses happen quickly. To understand momentum fully, we're going to bring in another tool, the ADX or Average Directional Index, added from the TradingView. Don't worry about the formulas. We're not diving into that. Simply know this. ADX measures the strength of the trend. High ADX means momentum is strong. Low ADX means the market is weak or sideways. To make it actionable, draw a horizontal line on the ADX oscillator at 25. This is our threshold. Think of it as a gatekeeper. If momentum isn't above 25, the market isn't providing a valid move. Keep that in mind. In a few minutes, we'll see why this number is crucial for confirming entries in our structure framework. Let's go to an example. But pause a second and notice this. This content is for educational purpose only and not financial advice. Check this hypothetical gold chart on the 15-minute time frame. Notice prices above the rolling VWAP bands. This shows a bullish market structure. Here's the key teaching. Trade on pullbacks or retests. When price returns toward the bands, don't rush. Step back. Let the market confirm the next movement. Draw a horizontal line at the most recent swing high. If the price breaks above this line after the retest, that's a potential entry logic. But don't execute immediately. Check momentum. Look at the ADX oscillator. If it's above 25, when price closes above the swing high, there is enough strength behind the movement. Now it becomes a valid entry. A stop loss goes at the VWAP band or the most recent swing low. Target 1 is set at 2 times your risk, target 2 at 3 times. Watch closely. This setup, the magic is the detail. Observe how price pulls back to the band, hesitates, then surges. That hesitation is your confirmation. The momentum line above 25 signals sufficient forces behind the move. Escaping retest, you're likely enter too early and get stopped out. That's why the setup is crucial. Now let's flip it. Same gold chart, 15 minutes again. But look at this. The trend is down. Price is below the rolling VWAP bands, signaling a bearish structure. Don't rush. Watch price pull back toward the bands. This retest is crucial. Only after price returns and confirms the trend is respected do we look for a selling opportunity. Draw a horizontal line on the most recent swing low. And when price breaks below it after the retest, that's your signal. But before entering a trade, check out the ADX. If the ADX is above the 25 level, it's showing a strong momentum, so the sell signal would be valid. Place your stop loss just above the recent swing high or the VWAP band. Target stays the same. First, 2 times your risk, second, 3 times. Observe the hesitation, retest, and momentum confirmation. These pause separates disciplinary logic from guesswork. We conducted a hypothetical backtest on the S&P 500 using a 1-hour time frame. And across 100 of trades, the structure framework showed a 62% win rate, 133% hypothetical outcome, and a profit factor of 3.26. 7 consecutive wins at peak, 4 consecutive losses at worst, and maximum drawdown just under 5%. Not perfect, but consistent. And before considering trades in a demo environment, follow the golden rule. Never risk more than 1% of your total capital per trade. Alright, that was the structure. Happy trading!